Welcome, everyone. Welcome to our presentation of the EPSmomentum.com platform. What we are going to do today is prepare you for earnings season. So earnings season is coming soon. It's right now, in fact, and we have a couple of stocks that have produced their earnings already. So let's get started into how we prepare for this and how we monitor earnings and earning shocks and gaps when they happen. So first, we're on the platform. We go to the monitor page where we can have a monitor here, a chart, some analytics, and then a basic quote on the side or an advanced one, full quote, where I can see the chart intraday, historically, see the earnings and all. So plenty of information here on the side that I can use. I can also enlarge that widget to have it all in one screen. But let's get started. So first off, I want to attract your attention to the EM score. For those of you who don't know, this score is produced every quarter. Every quarter we have a number that is based on earning per share, sales, free cash flow, and profit margin. So the higher these numbers are, the higher the EM score is, between -50 and +50. And so we have a -8 here, -17, -8, -11, -19. If we pull up another name like Microsoft, we have different values, of course, -4, -8, lots of minus here. If I put up NVIDIA, let's see what we get there. Yep, so EM 21, 25, 21, 25, 20. So this is in clear momentum. So this company has been really uh, knocking the ball off the park, um, knocking the ball out of the park, I would say, and off its cover. So that's the earning momentum piece. You can see it on the side here, the EM, the earning per share revision score, and sales revision score, which is the fundamental part of the stock here, and it's all full green there. The technical piece here is below, and we'll spend some time on it in a second. First, I want to focus on the revision score. Very important. You can click on the data set here, and you have the earning per share revision score and sales revision score. So those two values are the estimates that are revised over time by analysts, by Wall Street analysts. So as they revise their estimates, the curve goes up and up and up, pushing the stock price higher. So this is interesting. We can see the trend here where the revision is getting upped very nicely here before earnings, and earnings is produced, and then after earnings a little bit of positive revision as well. So I want to attract your attention on that revision score here, which before earning is increasing a lot a few days before the earnings, and the stock price is also rallying in tune with that. So that means the 5-day stock price change here from earnings to the previous 5 days, and the revision score is getting revised progressively positively with all analysts. So this is what we have in the earning calendar here. You pull up the earning calendar, and then you can see every day of the week. So we're the 7th of October here, what stock is producing their earnings today. The first value you have is the 5-day change. So since we're looking at earnings, you want to know what the stock has done in the last 5 days. And the second number is the earning per share um, estimates revision score change in the last 5 days. So if it has been negative, you would figure that analysts have degraded the stock in the last 5 days. Actually, no, sorry, degraded the stock. This is for the full quarter since earning day, so in the full quarter. So you can see the stock is down last 5 days. It's been downgraded by analysts all the way during the quarter. Maybe not a good picture. Xpeng here may be different. I can click on Xpeng and see the solution, the stock price here. We can see a downward price here, and you can see a downward price for the stock. Whoop, today, right? That's it, minus 13%. I was wondering what was that about. So minus 13% on the stock price, and the revision score is plus 9.6. So as you can see, the revision score here below has been revised up. So something happened here. Maybe maybe, I mean, the earnings are already out and the stock is reacting, right? But so the good thing is for every single of those earnings, you can go and look at the 5-day variation and then the historical earning day revision score on the stock for the full quarter. Obviously, the stock has been revised 5 days before earning, right before earning, in price, right before earning, and has been revised all the way, is in a good trend to continue to be revised up and maybe beating its target. Now, where do we find the targets or the target price that is going to be produced? You would go to the earning analysis, and on the earning analysis, you have a grid here. You flick to earning per share. You have two types of earning per share: before non-recurring item, which is a little bit less granular, and a more granular one for tech stocks, which is the street number, recognized to be the benchmark. So here we had 47. We're expecting 37. So a little bit of a down number. It's a flat comparing to the previous quarter. So it's be a zero growth and then a deceleration compared to the previous quarter. So that's something to note. The EM is minus 366. Okay, so now you know how to find earnings. I want to spend some time on earning estimates, how to find them as well. You will click on earning estimates revisions here, and it will bring another widget here. Let me make some space here, put it on the side, and maybe I'll move that out, remove this one, and move this one out. There you go. There you go. That's what I want to see. Okay, so you have you have 5 quadrant here. One is the estimates revision. So again, if I pull up any stocks, so back to my NVIDIA name, I can see the estimates here. The estimates revision score for earning per share, the sales revision score for sales, the estimates revision score for sales, and I can see it now since the beginning of the quarter or in the last 90 days. So from that day or from 90 days ago. So I can see from 90 days ago it's up and up, and since the beginning of the quarter here, it's up 4%. We also have a different source. So we have source 1 based on Zacks, source 2 based on FinHub. So we have 2 sets of analysts giving us their opinion on things. So we have 5.7 here and 16, again, all pointing upward. I can see them both on the chart here. So first I can see the price of the stock. I can see the sales or earning per share. So earning per share is in green. I can see in different source 1 or 2. You can see the two different charts. I can also see the competitors here. What were their revision estimates for the quarter since the last earning date, in earning per share, in sales, and their price change. So we can see overall positive change except for Intel, obviously. And we'll also have more information here from our AI analyst that tells you what are the concerns that analysts are thinking about this name, what are the questions that were asked at the last earning calls, what was the answer. So those are the recurring concerns, and you can see them here. And whether there's some issues that are exogenous or endogenous, exogenous and endogenous right there, and you can read all this. Then you have the actual questions from the analysts, and whether the tone was very optimistic when the management responded or optimistic. You can obviously see that in a bigger screen and have a full screen reader. So this is very useful. You can see the consensus also from all the analysts, whether they're in line, so everything agrees or not. It looks like for Q2 2026, there's a little bit of a disagreement. Let's go to annual. We can see 2028 is not agreed at all among analysts, almost one standard deviation apart from each other. So that's interesting to see. You can see every single number for every quarter going forward, and also in the next years. So that's really good to have the actual source data in front of your eyes that you can compare the stock with, or what's going to happen during earning. So I can go back to the screener here. I'm going to click on the screener. Right, I'm right there. And then I can click on any stock here. But let me start with a screener. I click on fields here and filtering. And once I'm on the filtering portion, I can start with my EM, which is my earning momentum model. And then what I can filter for is, actually, let me add it as a column. So it's added as a column here, last column. Let me just remove some of these other columns that we might not want to focus on right now. So this is the EM. I want to make sure I have some positive EMs. So I would want to filter to 0 and then add and so on. The other thing that you can do is obviously look at the report date. So we have the report date here. And the report date allows you to filter. So say I want to look at, I don't know, the stock that reported their numbers about 30 days ago. 30 days ago, all the way to now, 0. So 30 days from today, 0. Actually, hold on a second. Let me just rephrase that. I think this field has is brand new. It's brand new for the week. So let's see if we can reset this. So let me make sure we have something here. Let's say from the 1st of September, all the way to now. Click on add. Okay, we got 68 names. Okay, so 68 names reported in the last few days, or last few 30 days, I would say. That's the reported time. You can remove the reported time if you want. And then you have the EM right there in front of you. So you can sort by EM and focus on the ones that have the best EM. Okay, so let's assume that a couple of days pass and you want to focus on the earnings and see which one are the good ones or which are the good ones that happened recently. This is a good start. The second good start is obviously looking at the estimates. I want the estimates revision score. I don't want to change in percent. I want to change in value. So this is better because you can compare apples to apples per se. Since the earning day, you can have it 7 days ago, 90 days ago, or since the earning day. And here I want it to be, let's say, positive, at least 0 or 0.1. Okay, click on add. There you go. And you can sort by the best revision score in number. So we have the list here. So these have positive estimates revisions. So very good names that Wall Street is considering very highly, or thinking highly of. So that's good to know. And that's it. So that's great. And the other thing that is very useful is the ability to monitor. So I'm going to put up a name here like Sienna, and I want to know what was the reception of the market reception of the earnings day of Sienna. So that first earning day or first earning day jump or gap is very important. And for that, we have several ways of quantifying all these days. So the first one is the earnings gap. So earnings gap is really the gap between here and there. You know how big of a gap it is from day one.
So Sienna here jumped 20%. Okay. And we also have the ability to have earning gap on day 1, on day 2, on day 3, and so on, right? So I can see all 3 columns here. So I can see it jump 20% here first, then 0, no gap, and then it jumped again another 1.19%. So why is that useful? Well, I want to know if the pressure is so intense that the stock is gapping several days in a row, right? So every time I see some green numbers here, I can see that the positive reaction is significant. So let's have a look at Broadcom here. I look at Broadcom and I can see 15% high up, right? And actually 0.2 first and then 15% up. And then, that means a lot. That means a big push. Now, it turns out that it turned around a little bit, but still, it's very significant. So this is very good. You can click on earning gap, filter, and see the biggest numbers here. So we have equity 5% on day 1, big jump, retraced, but still higher up compared to its regular earnings. And then don't forget, we can add the revision score at the bottom and see if the score, the stock has been progressing properly. Yes, and Wall Street is in agreement, pushing the stock higher up there. So fuel cell, for example, didn't have much of a gap, a little bit maybe here, but significant move up. So how can we quantify those move up? Let's have a look at the revision score as well. So the revision score is here, minus 68, but going higher up since the earning. So here, this is a good example where I just don't have much of a gap, but I'll also have very good performance, very good big jumps in the next few days. And I want to quantify that. So what we have is the earning shocks. So I'll click type earnings here and I click shocks. So the earning shocks, let me just remove some columns here so we have some space. I'm going to remove this price change as well. So the earning shocks is that last column here. And if it works the same way than the gap, but it's a little bit different because you will add up all of the days and calculate the performance from the day before earning. Okay, so it's, let's say, a cumulative performance if you want in 1, 2, and the 3rd day after earning, right? So let's take Sienna, for example. We can see it went up. Earning shock was 23, then 23.6, then 25, then 25.38. And what happened? Exactly that. It went up and up and up a bit. So in total, at the end of that day here, we are at 25.38% performance, right? So that's pretty interesting. The second one is AYI. So here I jumped 5.4%, and then 341, then 2, then 199. So I'm just 199 up from the previous day before earning, right? So that earning shock after 3 days tend to be kind of back to flat mode, right? So maybe this is not something that you would want to follow through or get into because that that little excitement is now gone. So let's sort this column by this day here and focus on the big tickets here. So we got fuel cell, 62%. So that's what I was talking about. It was not significant in the earning gap, but it was very significant in the earning shocks, right? So we can see, and it's up 62% in 3 days, and then even more. So how more? Well, easy to say. You just type price change, and then you price change in percent, and then you put the earning day. So it's the price change from today all the way to before the earning day. Okay. Actually, I don't know why I added as a screening criteria. I just want the price change here. Oops, sorry. Let's do it again. Price change. Then you go to your column set, and then you select ETD, earning to date. There you go. Okay, so it went up 62% in earning shock, and now it's up 141%. Earning shock went up 25, now it's up 57. Earning shock's 23, 24, and then now it's 131. 18 and 3. So what I can see here is almost always if the earning shock is significant and positive, I can see a very good performance for the quarter, right? There's a few exceptions, but I can see a good performance. So there's a correlation between that very high earning shock in the first few days and a good performance for the quarter. So that is something that we are going to investigate and use our scorer for that. So I am going to remove the restriction of the number of days here. So I'm running about 1,000 names here. You know what? I can even remove that EM restriction. The only thing that I'm going to do is the market cap. I am going to increase it to, let's say, 1 billion or 2 billion market cap. There you go. So we have 1,800 names and positive revision score change. So 1,000 names. I'm going to click on the score. And on the score, I want the earning gap for the first day to be the higher, the better. I'm going to remove these. I want the earning momentum to be the higher, the better. I want the price change. Actually, you know what? Let's not do this. Let's do the earning shocks. And I want the earning shocks 0 day to be the higher, the better, and 3 day to be the higher, the better. Right? So now I have 4 criteria: a gap, shocks, earning momentum, and I can put the revision score in value. I can put the revision score all the way from the earning day, and I can put the revision score from 90 days ago, right? So I also want the trend of the revision score to be positive. So I want all of them to be the higher the better, and then I can, this is equal weighted, so they're all 17% weight, and I can click on run and see the result. Okay, the result is number 1, we have Sienna, Celgene, and so on. So what happened here? It scored number 10 here on EM and number 5 on the earning gap first day. On the earning shock, it scored number 6 with a 25% increase. And then on the earning shock 3 day, it scored number 21. And then on the revision score 13 and 28. Overall, number 1. Okay, so what do I have here? I have a stock that is rallying. It's only 30 days in the quarter and loved by analysts, and keep the rally going. Same here, big shocks, jump, rallying, a little bit of a correction, and still pushing high up there. XMTR, let's have a look. Big jump, rallying, and keep rallying. So if you figure this out on the 4th day, right, you had for 42 here, just noticing these stocks already gives you an edge in a sense that most of the time these stocks keep going very, very high because they have an earning shock that is significant. So again, I can carry on. ARGX. There you go. Look at this. Pretty impressive. UI as well. Very impressive jump, and the rest is history. Really high up, and yeah, so pretty good performance there. I can play around with all these variables, but you get the picture. It's really powerful. What I can do is I can look at the earning I might have not that much not that much stocks in candidate for it, but report date. Let me just actually let's start fresh here. Let's click report date, and let's put this field doesn't react properly. Earning report date. Let's put this one. Oops, sorry. Right, a little bit of a glitch here. Relaunching. Okay, so again, report date. Report date. There you go. And then relative. Let's say I want all the stocks that reported minus 15 days ago. Hopefully filter 55 names, and then I can start with those 15 days, it reported 15 days or less ago, right? So I'll go back to my scorer. What I want is shocks, earning shocks. I want the shocks 0 day, and I also want the shocks 3 day. Actually, I just want a shocks 3 day, but I want the earning gap, which is important. Earning gap 0 is the highest, perfect. I want the earning momentum to be the highest, perfect. And I want the revision score value to be the highest since the earning day. And I also want the 90-day one to be the trend to be the highest. And I can just run this. And now I find Jefferies. I'm going to pull up a chart here with REM turned on and the revision score turned on as well. There you go. So we get EM20. Okay, so it looks like we have 0 earning gap, and we don't have, so we have a very good EM. So EM is almost 20. That's great. And here, what do we have? Earning shock free day is 19th. Okay. And earning gap is 0. So yeah, earning shock is kind of 0 here. So not great. But it has the best EM, so it ends up being and the revision score is pretty high up as well with a 7. So that's significant. Acuity is the other one. So we have a good earning gap, but it corrects. Penguin Soft solution. Yeah, we get a big jump, good shocks, and then it keeps going on. MU. Yeah, pretty, I mean, mixed picture here on the shock, but very good EM. So we get great results. And you know what? Let's see if we remove the EM, if we have the same result. Obviously not. But I want to see what type of different names we'll get. Oh, there you go. Air Corp. Right. So really major rally here from earnings. Jefferies. Jefferies had a good shock, but then it dropped significantly. Accenture, TD SYNNEX, good shock upward. Carnival. So this is a good shock upward, and then it went down. So that was earning gap 0. That's why we have a high weight there. I think maybe we should have the earning shocks added here to 0, so we capture the first day as well. So let's see what we get. Different names. United National Food. There you go. So Now we get something interesting. Lamb Winston Holding. Interesting. So all those stocks are really set up for a rally. So this is a perfect setup. You look at earnings, you run this search, you save it, you give it a name, Shocks, and then you save it. So now it is saved here. And every day you would run that search and come up with the result here. And yeah, you should get good stock picks from that. Steelcase, Costco. All right, so that's what I wanted to show you today. I hope it was useful. I hope you find it entertaining as well. So thank you very much for your time, and have a good day. Thank you. Bye-bye.